Hello, welcome. We're here coming to you on behalf of the Small Business Center at Pamlico Community College in Bayboro and all throughout the Pamlico Nation, down on the lowlands of North Carolina. Great place to visit, great place to live, great place to do business. Our sponsor tonight, facilitator, is Katie Shorter, the director of the Small Business Center, who has just opened up her first year, and we're in her first presentation, her first semester of training entrepreneurs. So it's been my pleasure to serve with Katie and get this thing started. My name is Steve Carver. I'm talking to you from my home office studio in Dunn, North Carolina, over in the center of the state. My presentation number 975, and I appreciate you being on my journey of doing this for about 15 years. I'm not a lawyer or a CPA, just a fellow that's been in business about 64 years and happy to share with you free advice. The first part of the advice I want to tell you is always get a second and third opinion before you make a serious decision related to your financial security or that of your business. And the small business centers across the state are great places to go to talk and get confidential advice that'll stay right within the room. Some of you that are with us tonight are not from the Pamlico Nation area, and if you would like for me to give you the name, address, and phone number of the closest small business center to you, there's one close to everyone in North Carolina, I'll be happy to do that and also write a letter of introduction for you to help you get to know the folks. This is the last of a 16-part series tonight that we're finishing up, wrapping things up and connecting the dots. And folks, basically, your attendance awards will be based on through tonight. But I am happy to say that the folks down close to Pamlico, we're going to have a little awards presentation, just a networking get-together, have some pick-up food and snacks, and chit-chat a little bit because we've been meeting online now for the last month and a half or more. So on June 30th, a week after next, at 6 p.m., we'll meet at the Small Business Center. Those of you who can come, we'll certainly be glad to have you. Won't last long, but it should be a lot of fun and to renew our acquaintances, bring any family members that you want with you, and we'll enjoy meeting everybody. All of you get stars in my book. A great group of folks that's been with us through this whole thing, and I want to send out some special recognition for the 16 meetings that you've had a chance to participate in the last 2 months. And I'll start out with those who have participated the most, and that would be Christina, has been with us for 12 of the 16 opportunities to meet. Very loyal, always contributed a lot, especially in the person-to-person. So thank you, Christina, for being with us. And hopefully all these will be bumped up by one number later on. But she's the leader of the pack as far as attendance. Angela's in there next, having been with us for 10 occasions. Angela, thank you so much for hanging with us. And I see that you're back with us tonight, so glad to have you. So your number will move on up to 11. Tom, you've hung in there too, and my count has you at eight visits and different occasions, and so much more that you've done. I don't really look forward to bestowing the extraordinary extra mile certificates for you because you've certainly done a whole lot of work, and we appreciate it. Chuck, also, good to have you on board tonight. I've got you recorded at 8 different visits of different types the last couple of months. You two have shown great excellence in moving your business forward. I'm so proud of you. Thank you for taking my order, and thank you for a little discounts you gave me on the products that I bought. I'm looking forward week after next to get me a set of wind chimes from Chuck's Woodcrafts. How about that? Nicole's been with us off and on and definitely does a great job with her website. She's really pushing forward with her business. So proud of Nicole and all that she's doing. She's been with us 7 of the different meetings. Keisha's been with us 6 times. Tonight it makes 7, which qualifies her to become a member of the Academy after sending your quiz in. So thank you for all your work and what you're doing, Keisha, and congratulations to your family and to your daughter. Sarita Sampson over in Clinton has been with us 6 times as well. She'll probably log in in a few minutes. She's already a master associate and has designed our certificates for us this season. I'll show you those in a minute. Sarita is doing a great job moving her online assistant business, moving that forward. Beverly, great big thank you for all that you're doing. A big round of applause, everyone, for Beverly. And she's the entrepreneur who's been with us this season, who actually opened a new business, got it up and running. I think she's about ready to have her grand opening. She may be traveling tonight, but very close to getting back to North Carolina to start devoting time to her business in Aurora. Thank you, Beverly, for all that you've shared. I'm looking forward to seeing some videos and lots of information about the Blue Crab Boutique in Aurora, North Carolina. Jimmy Packer in Garland over in Sampson County, a barber there, has made great strides in remodeling his shop, bringing in extra products, opening up a website. During this season that we've all been working, Jimmy has decided to put his shoulder to the wheel and really is moving his business forward, not only into barbering, but also into different types of retail. Tim, brand new in the repair business over in Arapahoe. Thank you for all that you're doing. Thank you for your 4 times you've stayed with us. I know your business is going well, and you're working with Katie to move it more forward. But I wish Katie was here so she could see this. It's kind of amazing to me. I've been doing this for 15 years, and during her first semester of classes, big congratulations for Katie for her hard work, because she's had 119 people through tonight. It looks like we may even get over 125 with tonight's attendance. 119 class seats filled up during this series. That's pretty darn amazing, and I certainly am proud of Katie for such a great start. Your study guides that went out to you tonight, and if you don't have them, if you'll type into your chat board that you'd like for me to email them to you, I'll do that. But your main study guide tonight is number 975, which is covering the talking points we'll be talking about. You got your quiz there with the blank lines. I sent the quiz with the answers to you earlier. All you have to do is fill in those blank lines and email it back to me. And with pretty much everyone that's here, your attendance in the past will qualify you to become members of the Academy as associates, and we certainly look forward to that. Remember, the drill skills are there. I always keep those handy and refer back to them often. And a big subject tonight we're talking about is depreciation. So important, but it's kind of hard to understand when you're first getting started, but it's really, really important. So I'm looking forward to sharing the information with you. The drill skills, look at them, memorize them, and apply them. There's videos for 30 of them, so you can just sit back and I'll tell you all about them. Well, this is graduation night, but it's certainly more than celebrating, because tonight we kind of tie a lot of stuff together. We talk about all the things that we've been doing, try to bring it together into how you can best use them. Tying those drill skills together is certainly the best way to get started doing that, because that'll make everything come out to a complete circle. Roll on down the road with your business and keep it going time and time again. We're going to talk about 4 basic subjects tonight: record keeping, depreciation, taxes, and some selling secrets I'm looking forward to sharing with you. So let's get to it. But first, let me mention to you that starting on September 6th, right after Labor Day, every Tuesday, Wednesday, and Thursday night for a couple of months, you'll be able to log on right here just like you did tonight. We'll be starting a new series. They'll be very much like what you've just gone through in this series. I always change them a little bit to keep it interesting. But you know what? The people that come back 2 and 3 and 4 times, those are the people that this week that we're seeing a lot of these things start moving their business forward, because it starts making sense. You figure out how to apply some of these things we're talking about. So just because you finish one round, let me know. Let me give you an invitation right now to come back as often as you can. Help us to improve these classes, network with your friends, and start applying them. And I'm happy to give you more certificates and recognize your extra work with associates, advanced associates, and master's certificates to help encourage you to go on. I want you to be able to cover your whole wall with Academy certificates if you'd like. The quiz does need to come in. That's required to become a member of the Academy and attend at least 7 events, and most of you have already done that. Here's what the certificates look like. This is just for participating in here. Katie will determine the number of events that you needed to attend to receive your achievement award. Sarita did a great job, I think, in designing these. And then those of you that have gone the extra mile and done lots of extra homework and shown that you really put your shoulder to the wheel, we're so pleased to be able to give you extraordinary extra mile awards. Those who complete the academy, pass the test, show great interest in it, you'll become an associate member of the academy. You'll be on all of our email. I'll be open to you at any time, and hopefully be able to send you lots of business, because you'll be staying in touch, telling me about what your business is up to. After you complete the second round, you'll become an advanced associate. And after the third round, and fourth and fifth, and ever how many, a master associate. So we got lots of certificates to show you how much we appreciate your efforts that you're making to help other entrepreneurs move forward. Those drill skills are so important. Keep watching them over and over and over again. We've done it all throughout the series. I want you to own them. Can you tell? Let's move on here. One of our academy members told me heard I was had a sore throat, and told me about a new thing called throat coat tea. Have you ever heard of it? Throat coat tea? It's an herbal type thing, and it's really, really good. It kind of helps your throat. All of you know that I've had some hoarseness throughout this whole series, and I believe this stuff is really going to help it work better. So let's talk about record keeping a little bit. We don't have to keep records if you don't have a business. So let me just tell you right now, go ahead and plan to have a filing cabinet or two. Go ahead and plan, hopefully, to have at least a laptop computer. I really want to encourage you to have a desktop as well, so you can have a couple of monitors and really do some work marketing and keeping up with your records. I can tell you that with 2 monitors, you can generally get twice as much work done once you get used to it. It's just amazing how you can go through your work so much better if you got 2 screens where you can look at as many as 4 different pages at one time. Really important to have to be set up to keep records. You're going to need to have your accountant's records to keep up with them, and to save them and to safeguard them. You don't need to learn, please, to save your work as you go along. I used to have the toughest time. I'd get into my work and think about what I was typing and doing in the project, and forget to save what I was doing, and I have a glitch in my computer and lose an hour or 2 work, sometimes a day or 2 work. That is so disappointing. I want to tell you, get in the habit of saving your work as you go along. I understand that some of the computer software systems will save it for you as you go, but I wouldn't depend on that. I want you to get used to hitting that save button on a very often basis, very, very often. The little flash drives that are available to all of us, where you plug in and download and save stuff, it's amazing how much capacity some of those have. So when you go to the store to buy your flash drive, just don't buy that one for $8.50. If you've got enough pocket change to go ahead and get you one for about $30, it will keep probably a whole year's worth of your records on it. And if you can get 2 of them, you can download on a couple of them, keep them in a safe place, and feel pretty secure about having your records secure. Because it's not if it's going to happen, it's when it's going to happen. Computers die. Thunderstorms come through, we hit the wrong button, softwares lock up, you will find yourself wishing you had saved your work sooner than later. So find different ways to do that. Now, in the big picture, in the long term, there are companies that offer download services that will download your computer for you during the off hours, once a day, if that's what you wanted to do, and save everything for you. I understand that in the cloud now, there's some really good opportunities to save your work. This is a big deal. And Tom, I'm seeing you. I know that all the work you put into preparing a website, it has got to be so important that you save that, because when you come back to it, so many hours of work could be lost if you don't have a good way to save your work. So be aware of different ways that you can store your work, because it'll make a big difference to you, especially that day that you come and you can't dig it up and you need to go say, hey, where did I back this up? Let's hope you did back it up somewhere. What do you need to save? Just to give you an idea, you probably think you know all this, But look over this list. There's a lot of things that you need to save. Some of it is just not on computer files. Therefore, that's why you don't have to have some paperwork and understand that it's important that you keep it. When you birth a business, it's like birthing a baby. It's got its own identity, and it's going to go on living, and you don't have to keep up with the records for a long, long time. Subject to audit, subject to the day that you might sell your business, lots of other reasons that you want to keep it. But all your important legal documents is listed here, your articles of incorporation, your different audits, copyrights and patents, stock bonds and deeds and mortgages, all very important to keep. And then on the bookkeeping side, your depreciation schedules, financial statements, license and permits that you might have to buy. Someday you may have an audit, someone wants to see those licenses, you don't have to produce them. And of course, your tax returns and related documents will come up often that you're going to need to dig those up for one reason or another. Some items those items I just talked about are forever. They're permanent records. But then there's a lot of stuff that you need to keep for 7 or 8 years. Now, I'm going to say 7 years, which is the law, but in practical terms, I want to say 8 years. So you're going to start this year calling your paperwork 2022, a business year 2022, and start saving your business paperwork in that box or in that file or on your computer. I'm going to say the law is 7 years that you keep these items, but every year after the time date passes, stuff will keep trickling in, come in late, come in slow, and you will realize that you really wish that you had a place to save this. So what do? We'll just put it in this year's file and say, well, I'll go back and sort it out later. So in every business I know of, we'll have some stuff that linger over a year. So therefore, it's a good idea to keep these records 8 years instead of 7. But what do you need to keep? Everything common sense, bank statements, contracts and leases, expense reports, no doubt. But there's a little term I want to mention to you called the bill of lading. And a bill of lading is a shipping document. That's what the shippers call your shipping documents. And the shipping documents that this or that item was shipped from point A to point B. And it's important that you keep up with that. More importantly now, because of taxes related to selling out of state. A lot of you may be selling items that when you sell out of state, you do not have to charge sales tax because it's going out of state. And those laws are kind of finicky, and you need to know all the ins and outs about them. But in general, and this is general terms, remember I told you I'm not a tax accountant, but in generally, if you're selling over $100,000 worth of material into one state per year, or if you have an office in that state, or if you have an employee that lives in that state, then you have to, let's say in Virginia, when you sell something out of North Carolina, if those things apply to you, you have to collect Virginia sales tax and send it back to Virginia after you collect it. But if you do not have an office there, you do not have an employee there, and you are selling less than $100,000 worth of stuff in that state per year, there is an excellent chance that you do not have to charge tax and collect it for them. You don't need to get with the sales tax people depending on the type of business you're in and determine how it applies to you. So you need to keep up with those bills of lading, because if you have an audit and you shipped it out of state and you can prove it went out of state, then that may get you off the hook at having to collect North Carolina sales tax for it. If you don't have that bill of lading, and you did, then there's a chance you might have to come up with that sales tax and pay it whether you collected it or not. Employee personal records after termination of employment, whether they quit or whether you fired them or whatever the situation was, you really need to keep your employee records a long, long time. I don't want to say permanently, but I would say at least 15 years. Why? Because employees sometimes have accidents on the job or get hurt, and their memory says, you know, this all started back when I was working for Steve. And therefore, when they go to the hospital and talk to the doctor's going to say to the nurse, and it's the law that they ask them, is this injury related to your work? And they say, yeah, you know, it started back when I used to work for Steve Carver about 10 years ago. Well, what's the name of that company? They write it down. Well, let me tell you, I'm going to get charged a workman's comp claim if the employee says it started while they were working for me, even if their memory is fishy, or maybe whether it did or not. You have to stay on top of that. So when you get a bill from the workman's comp people charging their injuries to your account, if you can prove that it didn't happen, then your account's not going to be charged. Yeah, you have an account, I call it a workman's compensation account, where every week when you have employees, you pay taxes, and that workman's comp money goes into your account. It's kept in a separate accounting system, and as your employees draw workman's comp, that account is drawn down. When that account is empty, they will raise the rate that you have to pay until you get back a certain amount. So that's one of the taxes that you'll have to be paying when you have employees. 7 years, you want to keep up with your sales tax returns, of course, all your invoices. As we talked last week, I want your invoices to be in numerical order so that you can always be able to find by number or by date which business that you were doing. So as you start doing business, start your record keeping so that you can find the dates when you need to go back and find them. Keep up with your canceled checks so you can prove bills that you paid. Maybe you don't have an invoice, but if you've got that canceled checks, you can prove that you paid certain bills or where the money went. Now, down in the Pamlico Nation, that is definitely flood country, as we all know. It's a hurricane and tornado country. And from time to time, we're all going to get storms all across North Carolina, one shape or another. Hopefully, we're not going to see any for a long time, but you don't ever know. I want you to know that when you have a disaster in your area, every small business person may have a chance to say to FEMA, look, my small business has been really hurt because of this storm, and our area has been determined a disaster area. When you hear on the TV that the president has declared a certain area in North Carolina a disaster area, that means the people within that area are eligible for special benefits from FEMA or from the Small Business Administration. If they do come into your area and you have a claim and you're saying, I lost this much money because of the storm, then they're not going to be interested in how much money you lost. They're going to be interested in how much profit you lost. You just can't say that I lost $1 million worth of business and expect someone to hand you $1 million, because we all know now that just because you did $1 million worth of business don't mean you made $1 million worth of profit, right? So what they're interested in is you're saying, because of this storm, I was shut down X number of weeks in a certain period of time. Then they're going to ask you to show them the records from that period of time from previous years and show what your profitability was during those times in normal years. And they may indeed reimburse you all or a portion of the profits that you lost. That's kind of the way that works. It might be in the form of a grant or it might be in the form of a loan. But at any rate, it's important to keep up with your records so you can pull them out. And remember that if this happens, sometimes it is a good thing to show profit, because if you didn't show any profits, you can't ask them to reimburse you for profits that you lost. Okay? Part 2. Let's talk about depreciation a little bit. And I'll stop right here. Those of you that were joining us tonight thinking that I was going to give you a great big tax lesson on all about taxes, no, that's not what I'm here. I want to talk to business owners about the most important things on the top layer that you need to be aware of as you're starting your business. We offer lots and lots of other seminars and classes where we dig into these subjects individually, but tonight we're just trying to tie it all together after our 15 other meetings. Depreciation is a word that maybe you've heard of, but hadn't ever tried to apply it in your business. What does depreciation mean to my business? I've heard of my car depreciating or my go-kart. Of course, I know my boat depreciates. I had a house one time and it depreciated. I had another house and it appreciated. So what's all this got to do with business? Well, it's got everything to do with your taxes. Big time, especially as you move into small business. You take folks like Tom and Chuck and Beverly, Tim, if you own physical property, if you own assets, hard assets, then depreciation is going to come into play in your business and will make a lot of difference in how profitable you might end up being. Understanding depreciation is an important thing I want each and every one of you to do to the level that you feel comfortable with. I mean, that's why you have CPAs, right, to do all the hard work and dig deep. But you need to understand a few things about it. So I've looked and read a lot about it, and I have a hard time understanding all this, I'll tell you that. But I did find, after reading about 20 different articles on the internet, looking at some magazines, I found this lady, Lisa Borga, who did a great job with laying out what depreciation is all about and how it affects small businesses. So one of your handouts is Lisa talking about this in her professional way, but you know what? She uses everyday terms and makes it make a lot of common sense. So I want to encourage you to hold on to that handout that I've sent to you. Hold on to it and read through it a couple of times. Just take your time. Don't try to absorb it all at one time. But get a gist for what's there, because it will help you have a better understanding about what we're going to talk about here tonight. So let's focus on this a minute. What is depreciation? The definition is it's the reduction in the value of an asset as time passes due to wear and tear. That is, a brand new car that you buy today, brand new, smells good, never been run, it's worth a certain amount of money today, but as you use it and it gets miles on it and you get a dent on it here and there, it starts using some oil after a while, it becomes worth less money, right? That's depreciation. It's becoming worth, it has lesser value as time goes on. And big assets such as machinery and equipment and printers and computers and cars and trucks and tractors, that's big money, and it has a lot to do with the value of your business, a lot to do with it. So why do we care about it? Well, we're going to learn that you can depreciate or you can capitalize your equipment and take tax deductions for a portion of it, a lot at one time or a little bit at one time. But let's say our business is just getting started, and we're probably not going to make, if we make any this year, we're not going to make but $500 profit this year. Maybe we bought in a whole lot of money, but we subtract our expenses from our income. Our business plan tells us we're probably not going to make but about $500. But I need to buy a $5,000 piece of equipment. So if I buy a $5,000 piece of equipment and I use it all as depreciation to take it as a tax write-off, then my books are going to show that I lost $4,500. And that's not good. We don't want our first year depreciation or first year financial statement to show that we lost a lot of money. So the government gives you the opportunity to depreciate things in a different way so that, one, you can use those tax benefits over a longer period of time, and two, not to mess up your financial statement so bad that no one will loan you money. That's what it's all about. So here's a little example. And maybe this really fits some of where y'all are. Let's say you started your business, you either borrowed or you saved $10,000 and you got that in the bank. So today your business is worth $10,000 because you got that hard asset in the bank. I can feel it, I can touch it, I can see it. I can see it in writing. I know it's there. My business is worth $10,000 today. But tomorrow, I'm like old Chuck. I really need to purchase an expensive saw to go into my business. And this industrial saw that I'm going to purchase is going to cost me $5,000. Well, I don't take $5,000 of my cash money and go buy that saw. So my question to you here is, the first basic important question. When I did that, does that mean that my net worth of my company went down $5,000 because I lost that cash? Did it? No, it didn't. Your value didn't go down 50% to $5,000. No, it didn't. You know why? Because now not only do you have the liquid cash left in the bank, the $5,000, but you've also got a brand new saw that's worth $5,000. So on this given day, when that saw is brand new, never used, full value, you're still worth $10,000. Follow me? All right, so let's take it to the next step. Tomorrow, the saw is used and it's not new anymore, and it starts depreciating in value. starts depreciating in value. So we've decided, after talking with our accountant or CPA, that I don't write this saw off over a 5-year period. In other words, I don't take $1,000 depreciation every year for the next 5 years to help offset my tax load. Now, when I decide I don't do it for 5 years this year, I can't change my mind next year and turn it back to 1 or 2 years. Whatever you start with, you have to finish. So take a look at this. So the first year you bought the saw, it stays on your books for $5,000. But the second year, your tax accountant is going to show that it's worth $4,000. Whoa, boy, excuse me. All right, $4,000 the second year. Third year, value goes down to $3,000. Fourth year, down to $2,000. After 5 years, it's on the books at $1,000. And on the 6th year, it's off the books altogether at 0 book value. You with me so far? Goes down $1,000 a year over a 5 year. Now, sometimes with different laws in place, you can write things off 10 years or 7 years or 3 years, or sometimes you can write it off all at one time. You've got freedom to decide. And that freedom can get you in a lot of trouble sometimes, or it can save you a lot of money. Okay? We'll get into it a little deeper now. Let's say now that you did the 5-year write-off just like we talked about on your depreciation plan. And you took the $1,000 a year off. Well, you know what you just were able to do? You were able to reduce your tax exposure by $1,000 per year. Let's say that your taxable income, after you ran all your numbers, figured out what was left, and your taxable income was $1,000 that first year. And if you were taking $1,000 deduction per year, that $1,000 depreciation would wipe out your tax exposure and you wouldn't have to pay any taxes. How about that? That's where depreciation saves you money on your taxes. And it's the same way. So over this period of time on this particular piece of equipment, you'd be able to, over a 5-year period, save $1,000 per year. Now, notice I'm not saying in tax payments. I'm saying in tax exposure. All right? Now, I need to interject something here. As we're taking deductions in our business, there's going to be 2 kinds of deductions. One is going to be a regular business expense. That's just everyday expenses that we have to do. There's nothing tangible about it, especially on items that are throwaways or expendable, things that don't last at least a year. Those are regular business expenses. And then there are capital expenses. Capital expenses are all about items that are tangible, things you can hold and feel and count, put on a shelf, dust off, pay insurance on, hard assets, land, buildings, parts, computers, tangible, capital expenses. And when we determine that something is going to be a capital expense, we're going to say that that is becoming an asset. All the assets in your business, or most of the assets in your business that are on your depreciation sheet are going to be called capitalized items. Okay? Capitalized items. So let's get into that as we go a little further. Part 3, let's talk about taxes. Every time I talk to an accountant, remember I said I'm not an accountant or a tax advisor, but every time I have a chance to talk to a new accountant, I kind of slip in this question right to begin with. Look, I work with brand new entrepreneurs, and I sure don't pretend to know all I need to know about taxes. But what tip would you tell me to give a brand new person just getting started in business about their taxes? What's the most important one thing that you and I want them to remember? And you know what? Every one of them, without exception, have told me this. It's like they taught it in school. What's the first thing you tell an entrepreneur? Because all of them have said the same thing. Entrepreneurs must learn how to pigeonhole their tax money. Entrepreneurs must learn that just when you collect those taxes, you are obligated to pay it out to somebody in the near future. You can't just put all that money in your checking account and figure that you can spend it at will as you want to, because there's going to be a payday. And you know what? This is good advice, because when I was first getting started, I got caught behind this 8 ball a time or two. And let me tell you, through the years, I've seen a lot of people have to go out of business because they didn't follow this advice. As you start collecting money, you start collecting taxes, pigeonhole. Put that money aside. Keep it in a separate account or a separate accounting, because you got to know that you're going to have to pay it out on a given date. And if you come up short, if you borrowed from Peter to pay Paul, and one of the Peters you borrowed from was the government's tax money, it's going to backfire on you. Every time it will backfire on you. Maybe you get by with it this time, so you do a little more next month, and next month even a little more. And one day the hammer's going to fall. You're not going to have the money to pay what is due. And you know what happens? They put a chain on your door. They come and collect whatever assets that you might have and shut you down. You have to pay your taxes on time, or you start getting in big trouble. Pigeonhole that, buddy. Save you a lot of time and effort later on. All right, let's get back to these expenses. Business expenses are just what we do every day. The cost of rent's always just a normal business expense. Travel, same thing. Salaries, payroll, money that we pay out to buy services, that is business expenses. It's not an asset. It's just a regular deduction, a 100% deduction from your tax exposure, but a business expense. Capital expenses are those items for large things, assets, things that have a life for more than 1 year, items that you would depreciate or amortize, that we'll talk about later, or deplete, items that you want to keep up with. The capital expenses are describing your assets, and I don't give you a new word right now, your book value of your business. Now, back in week 4, when we were talking about fair market values, I gave you a little footnote that fair market values and book values, they sound alike, but they are a long way from being the same thing. So I want you all to remember that. Very important for entrepreneurs. Let's say we're going to buy 3 things now. We're going to buy a $250 printer, a $2,500 commercial printer, and we're going to buy a case of printer paper for $250. My question to you is, are these capital or just regular business expenses? Well, that $250 printer, like the one I've got right over here beside me on my right arm, in my business, I won't buy but one of those every 10 years, so I'm going to capitalize that. I don't put it on my books and capitalize it and depreciate it, because in my little business, everything that I can show as an asset makes my business look like it's worth more. And I don't have lots of parts and property now that I'm operating out of home office, so I try to put some items, capitalize them just to show that my business has net worth and is real. However, if I was an insurance company with 500 agents out in the field and every one of them had one of these $250 printers, I probably would not capitalize it, because just think of all the paperwork they'd have to do, keeping up depreciating 500 items a year like that. So here's where you got the flexibility. One company like me might put that as a capital item, where a big company with lots of printers would say, no, this is just an expense. And you have that freedom in your business. Now, the $2,500 commercial printer, I think even the larger companies that something in the last 10 years would probably capitalize it. I certainly would in my business. But the printer paper, that's a throwaway. We never consider that as an asset. Now, we might call it our inventory, our office supplies, and count that paper as part of our assets, but it wouldn't be anything that we depreciate. Let's talk about some tires now. Let's say we're in the trucking business. I don't buy a $2,000 set of tires. Well, in my business, those tires will last me 10 years probably, at least 7 or 8 years, so I would probably capitalize it and depreciate it. However, if I was a trucking company with hundreds or thousands of trucks, man, that's just throwaway stuff. I go through that many of those tires, hundreds of them a day like that. So for that company, they would consider it an expense. A brand new engine, same thing. In my business, I'd probably capitalize it. A huge trucking company probably would not. How about renting things, like renting a forklift? Rent is always just a regular business expense. You can't capitalize something you can't touch. Payroll, regular business expense. The money you pay other people to do things for you, like CPA fees, regular business expense. A brand new set of shop tools, $4,000 worth. Well, I capitalize that because we can keep up with it, we inventory it, we improve, we got it. But then you might say to me, well, Steve, who in the world buys a $4,000 set of tools at one time? Well, Tim's in business. He'll buy $100 this month, $500 a month after next, maybe $1,000 another month, and $50 another month. Well, through the course of the year, he might buy $4,000 worth of tools. Well, here's a little wrinkle you can do. You keep up with all those little things that are hard assets, put all your bills together at the end of the year, call it a set of tools, and you can put it on your books as a $4,000 set of tools, but keep up with how you got there so you can prove it. But even buying little things along the way that you can group together, you can take advantage and capitalize. Now, I want to rent a forklift, and I rented a forklift for 24 months for $1,000 a month, $24,000. Well, you know what? Rent is always a write-off, which is an advantage if you're a new company and you needed that write-off if you were being very profitable, because that would save you a lot of tax exposure. But it might come back and take a different light in a little bit. How about delivery costs when we have something delivered? Delivery cost is always a business deduction. So I rented that forklift for 24 months for $1,000, put $24,000 in it. 24 months later, the deal that I did with the forklift company was, if I rent it to you for 24 months for $1,000, you will sell it to me for $5,000. And I want to do that because I need that forklift, and now I don't need to keep paying rent. So I write them a check for $5,000. Now, those $24,000 checks, I could not depreciate those. But you know what? This $5,000 check where I am buying the forklift, that one expense, I can put it on my books as a $5,000 forklift. And it will have a book value of $5,000. So listen to me closely here. That forklift probably has a fair market value of around $24,000 or $25,000. But on your books, it's only going to have a book value of $5,000. So we have to always keep in mind that when people are talking about the value of their business, the book value may be one number, high or low, but the fair market value that you would consider paying for it or loaning money on it may be a lot different on the other end of the scale. This is a good example to show you how that works. Let's talk about doing taxes now. We have to think about it, right? New business owners need to know one thing to begin with. If you're very inexperienced in bookkeeping and accounting, as most of us probably are, then I want you to find a bookkeeper. They don't have to be overly experienced, but at least know something about your type of business. Understand the goings and comings of your type of business. What does it take to make a profit in your business? Now, bookkeepers and accountants, you're not paying them to run and manage your business or to tell you what's right and what's wrong. No, we're not ever going to say it's the accountant's fault or the bookkeeper's fault that I didn't run my business right. But I do want you to know that a bookkeeper that has some idea about your type of business is going to be able to give you a lot better information and do what you need them to do, as we talked about last week, and give you the information you need from the bookkeeper. I also want you to hire a CPA who is somewhat familiar with your type of business. Now, CPAs have to, before they get that title, become certified, pass all the tests, and get their license. They have to do a certain amount of time of apprenticeship, so they're not going to come into any business totally green because of their training and the law. But if you can find one that has previous experience with your type of business, that would be more helpful to you than ones that do not. Now, here's a website linkage on your handout and on the screen where you can find additional information to help you read, if you want to, about hiring CPAs and bookkeepers. Let's talk about two words here, the word avoidance and the word evasion. Tax avoidance and tax evasion. One's a good thing, one's not a good thing. Which one's a good thing? Tax avoidance is a good thing because if you learn how to run your business and handle your books, adjust your figures and enter things into your books legally, but in such a way to help you have less tax exposure, then that means you're going to end up with more profit at the end of each year and have a better chance of remaining sustainable. If, however, you start using practices that cheat, evade, lie, misrepresent, that's called tax evasion. And the law people don't have a sense of humor when it comes to that, and you can get in serious trouble doing it. But I need to tell you, as a business person and a coach, learning how to avoid paying taxes is a good thing. Because if you don't, the government has figured out all different ways to take money out of your pocket, and it's up to you to be smart enough not just to hand it over like you don't have any sense. That's a pun, there's sense, right? You won't have any sense if you hand it all over, that's for sure. So let's talk about tax avoidance, and we'll show you some different things to think about. The difference in avoidance and evasion is legality. Tax avoidance is legal, is you handling your systems to reduce your current tax liabilities and to look for advantages everywhere you can. Evasion is illegal means that you use to avoid taxes by evading and lying and cheating. Hot buttons. A lot of you came on board tonight and said, well, you know, I just wish I knew how to pay less taxes. Well, the way we pay less taxes, of course, is our deductibles. The more deductibles we have, the less taxes we'll have to pay. So let's kind of look at the different deductibles, and all of us will have different ones that are important. The first one that always comes up in these classes are, how much deduction can I take for my home office use? I got my office set up at home, and therefore my business is running here, and I can use that as a business deduction. Is that right? The answer is yes. Got to be careful here, though, because the basic rules are, if you want to play square feet, that is, my office represents a certain percentage of the square footage of my home, and we'll say 10%. And your expenses that might be related deductible are $100 this year. And therefore you would say, well, 10% of my expenses are related to my home office, therefore I can take a $10 deduction for home office use. That's just a basic run. And some people have some astronomical numbers, some have some small ones. But when you play it that way, you're always going to have to get into the square footage. And all of us are going to say, well, the room that my office is in is the great big room in the whole house. You know, we're always going to present it in a way to get the most deductions we can. And in the case of explaining that to an auditor, that might become a little squirmy, because the auditors might say to you, well, do you have a private entrance for your customers? Is it really an office? You have a bathroom for them? When you're there, is the rest of your family in that same room with you? That doesn't sound like that's an office to me. So you're going to have to explain, take pictures, pull out some measuring tapes, actually show them what's going on. A better way is for you to determine, hopefully you'll be able to say you've got an outside or a detached building that you can say, this building is my office, and I'm going to rent this building as an individual. I'm going to rent this building to my company for X amount of dollars per month. And then whatever that rent is, you can set it where you need to set it, high or low. But the company then writes a check to you, the individual, every month and pays you rent. Well, how about that? First of all, the company is going to write that off as a tax deduction. And then they'll hand that rent to you as taxable income to you. So that's a trade-off. See? But here's what's important. You can charge as much of that rent as you want to charge. You don't have to get into all the square foot mess and figure out this and that and how much percentage of expenses. Not only can you charge a lot amount of rent, but also all the expenses related to keeping that office up, mowing the grass, the entire yard, watering the grass, the water bill, the electric bill. You can have in your rental agreement that the company is going to pay all related expenses to that office as it goes. That gives you a lot of gray area to use that good old word perk. You know what a perk is? It's not a percolator like a coffee percolator. The perk I'm talking about is the advantages that you're able to maintain as the owner of the small business. And I'll just give you an example of one of the types of perks, and we'll get into some more of them here. Travel, meals, and entertainment used to be a wide open field. You could just go most anywhere you wanted to go, call it a business expense with a little bit of evidence, and write everything off. Well, those rules have really tightened up since 2008, and you got to pretty much document everything that's related to a customer, kind of prove it was business related, the whole thing or whatever. Sometimes you can write off the customer's expenses, but not your own, or other guests that are along. So you need to do some reading, talking with your tax advisor about if you've got a lot of travel expenses. So I thought at one point in time, I was always into saltwater fishing. I said, man, this is great. I don't buy me a nice big boat, and I don't have the best boat down at Emerald Isle, and I don't go fishing. And by golly, I'm going to write off all those expenses as a business cost, because every now and then I'll invite one of my customers to go fishing with me. Well, I didn't even get out in the marina with that logic before the accountant said, oh, no. If you got 5 people on the boat and one of them's a customer, you might get to write off 1/5 of the expenses that day, but not the whole thing. You're not going to get to write off the boat payments and the slip rent and all that. So be careful before you jump to the wrong conclusions. Now, my big old belly here proves to you that sometimes the best advice, the best exercise that I get is jumping to the wrong conclusions. Any of y'all have that problem? Yep, I bet you do. So let's don't jump to the wrong conclusions when it comes to deductions, because it can really get you in your pocketbook. A good news is, though, that most any kind of interest that your business pays, interest on loans or debts or things like that, that's a write-off. So when you borrow money to grow your business, the interest that you pay on that borrowed money, that's a tax write-off. Rental expenses, if you rent a tractor or a backhoe or maybe a computer or something special, anytime you're paying rent, as long as it's used for the business, you can write it off. There's another opportunity for a perk. Some business owners will rent a car every week to use in their business. I rented a car this past week because we'd had an accident and Allstate's paying the bill. But when I was getting my rental car, the lady at the desk says, this car you're getting, Steve, the fellow's bringing it in, he rents one every week for his business expenses. I said to myself, hey, that's not a bad idea if it works for you. So he drives a nice car. You don't have to argue about the deductions, because it's just plain as day. If it's rental, you can write it off. Taxes that you pay, you write those off. Insurances, you can write it off. Business-related training and education, write it off. Now, these are regular deductions. Uniforms, write it off. I write off my uniforms. I don't wear a uniform with Steve written on it or get it from the uniform people, but I rented uniforms for 60-some years for my parts department, my mechanics, and the whole time I was doing that, I was saying to my sales team, once a year you go buy $300, $400, $500 worth of clothes, bring me the bill, I'll certify it, and I can write it off as uniform expenses. But now as a business owner, every few months I'll buy a certain amount of clothes, keep up with those bills, and write them off. I mean, just to sit in front of this computer here, of course, y'all don't know if I got any clothes underneath here, and they say a lot of webinar folks don't ever put on pants, but I do. I'm not going to sit here and do talking to you, but I will say to you, I do try to have some start certs in the wintertime. I have a cleaning bill, probably to the tune of $30 to $50 every 2 weeks. I consider that uniform expenses for my business. I want y'all to look good. I want you to dress to impress in your business and keep up with it, keep up with your expenses, and you can get some tax help by doing that. Okay, tax preparers and tax collectors is the next part of our subject. First of all,
Hey,
yes.
got a question real quick. Got a question real quick about the last slide. Talking about the boat. If you were to take one particular individual out on your boat and you had 4 other people on your boat, what's to stop any business owner from saying, I didn't take all 4 or all 5 of those people out for business-related purposes?
The magic word comes in is perk. So how you answer that question is going to be exactly as you presented it. Damn if I know. I don't know who's going to tell you to do this or that, and the way you write it up is up to you.
All right, that's all I needed to know. I appreciate it.
and if you don't overdo it or kick the dog to death, you'll probably get along just fine. The folks who raise the flags up are the ones that do it all the time and run up great big deductions that just show, something just isn't right here. And
okay,
common sense goes a long way.
And even going to like business use of your car, if you are traveling to and from a restaurant and you are taking a client out, or if you're using your car to travel from your personal house to your business house, is that something that you could also write off as a deduction?
I would.
Perfect.
Yep.
I appreciate it.
It's not a bad idea always to give them a little something they can find, because they're going to keep looking until they find something.
Awesome. Thank you.
All right. Thank you for the question. It's a great question. Let's talk about taxes insurance just a moment. As I was starting out in business, young person, lots of children, lots of expenses, lots of debt, I was afraid to death that I was going to have a heart attack or die or get in an accident and leave my family with a lot of debt related to the business. So I was insurance poor. I had a lot of insurance policies. My dad always taught me that you don't ever want to leave your loved ones in debt if you kick the bucket. So I had a lot of insurance to protect me and their security, educate my children, many thousands of dollars worth. And you know what? Through the years, we determined ways that we could pay for it with pre-tax money or let the company pay for it and use it as a write-off. Back then, it was fairly easier, but now I think the basic rule is, as long as your company is the beneficiary of your life insurance policy, as long as the company is the beneficiary of your life insurance policy, the company can pay for it and use it as a 100% write-off. Some states and some people tell me that as long as the company is 51% beneficiary, they can write it all off, even though that 49% is going to your estate or to other beneficiaries. This will vary with different types of policies from time to time, but I can tell you that it is important that you look after your loved ones and your business debt as you go along and build a sense of security for yourself. Because at some point in time, as long as the company is the owner of that policy, there's no question about it. But at some point in time, maybe you don't need all that insurance, or maybe you want to own that policy. Well, as the president of the company, you're able to sign the ownership of that insurance policy over to yourself, and then you become the owner of that policy. And if it was one of those type of policies that have built up a tax value through the years, could be a really good perk to you. Just try to read between the lines here. All of this requires is you have a good insurance person you talk to, and you do your insurance planning very carefully. Now, disability policies come into play different ways. Disability on you or your key employees that your company is paying that policy 100%. That is usually a 100% write-off for the company to give you the assurance that if you should get hurt, that you're still going to have some disability income coming in. So think about that as your company starts making money and can afford these types of insurances. What that can do is let you be able to lay down at night and close your eyes and go to sleep. Insurance laws change all the time, so again, you need to find a professional advisor but it can be very, very important to you. Don't take your all your little bills, put them in a big plastic bag, and carry them to the accountant and ask them to start looking through it. Every time they pick up a piece of paper, they're going to account for it. It will be logged in on a record, the time they spent on it, and every minute that's spent on looking at every little piece of paper you send to them runs your bill up. So the right thing to do is lay out all your information and summarize it yourself. Add up all your tax bills, all your rental bills, all your insurance bills, summarize it, and give the accountant the summary. I will guarantee you, if they need more, they will ask for it. But lots of times by doing that, you can cut your tax bill down by many, many percentages. Summarize them, just give them what information they need. Now, a certified tax accountant is kind of an officer of the court. And if you're using a CPA, that means your return will stand in better favor with any auditor that comes along, because they know that the CPA is sworn by law not to put any information before them that's not legal, that's not the law, that's not true. So a CPA sometimes will ask you really hard questions, and you need to answer them truthfully, because they're just like your lawyer. But here's the rest of the story. You just don't need to start pouring out all kind of information that lead to more questions. Use a little common sense. Tell them what they got to know, and hush. Okay? If they need to know more, they'll ask it. Because every time you turn a page in a book, it's going to start costing you more money. Tax collectors are going to come at you from 4 different ways: the city, the county, the state, and the U.S. government. The U.S. government likes to call themselves the IRS or the U.S. Treasury. North Carolina likes to call themselves the NCDOR for North Carolina Department of Revenue. And of course, the county tax collectors and the local town clerks. I consider all these different things taxes, whether it's fees or estimates or license or permits. It's all money out of our pocket that I consider to be a tax. So you might debate that a little bit. I don't care. Sales and use tax are going to be the ones we deal with the most, and that's with the North Carolina Department of Revenue. They have offices in Raleigh, of course, but also scattered all over the states in different region offices. And I want to say this to you. Through the years, I found the North Carolina Department of Revenue really good people to work with. As long as you were going there asking them for information to help you get your business started, you usually found good, sound advice, people that were glad to help you and talk to you, and acted like they appreciated it. So it did take me long to learn afterwards, though, that as my business got larger and more complicated, I was a whole lot smarter to have my accountant call the North Carolina Department of Revenue, call the IRS, call the county, call the city. Because indeed, your accountant can ask questions and never mention your name. The accountants can get information for you and then give you advice without ever putting you in the frying pan. So oftentimes you're a lot better off to have someone else make that call for you that are operating kind of like your lawyer to do that. But just getting your business started about the basic simple stuff, I encourage you to call the North Carolina Department of Revenue, go to their seminars. They have great seminars. Visit the regional offices to help you get started, because they're ready to help entrepreneurs, and I'm going to tell you, they do a fine job. Next, that was all the good news, the happy, the smiles, the Chamber of Commerce, right? If you don't pay your sales taxes and your use taxes the way you're supposed to, they will slap your hand. All that goodwill and sense of humor I just mentioned is out the window. You're going to be dealing with some sharks, and they got sharp teeth, so don't mess around with them. Learn to begin with, and don't get in trouble. Different types of taxes: withholding, privilege licenses, unemployment insurances, franchises, all kinds of taxes with fancy names. Don't worry about it right now. Before you finish that tax return, your tax advisor will introduce you to all of these. But I kind of find it interesting that they call one of these a franchise tax. But, you know, I don't have a McDonald's, do you? I'm not a Chick-fil-A, but I pay 2 franchise taxes every year. I pay one to the feds and one to the state. In their point of view, They don't care if you make 1 penny or not, or if you lost $1 million, you're going to get to pay some tax. So on each one of their forms, they give you a little thing called the franchise tax to make you feel good. But what that really is this is the basic $200 you're going to pay just to do business with us, whether you say you're making any money or not. So just get ready for that. That's always a pleasant surprise for entrepreneurs. You get to pay 2 franchise taxes, state and federal, every year. Not very much, but just enough maybe to cover the postage, okay? So just look forward to seeing that coming. Your county tax is kind of a weird duck. State and federal come together. They're based on each other, sort of, and that's based on how much money you make, your income. And if you're losing money, generally you don't pay hardly any of those state and federal taxes except for a little few special things like franchise and maybe some others. But the county taxes is a whole different animal. In North Carolina, your county taxes are based on what you own, on those assets, on those depreciated items that we talked about, remember? So county taxes and depreciation are hand in glove together. They go together. So your county taxes are based on your business vehicles, inventory, tools, real estate, items that you rent or lease to other people, and a long list of other things. Notice the word inventory. That's not inventory of things that you have for sale. That's inventory of things that you just own, tools and different building supplies that maybe you would own, but not for sale. We're blessed in North Carolina in that we're one of the few states that do not have an inventory tax. That's how car dealers can keep inventories on their yards, and tractor dealers can, and Lowe's can keep inventories in their warehouses, because items that you have in stock for sale is not taxable. You don't pay county taxes on those. And let me tell you, that is a good thing that we have in North Carolina, and I certainly hope we maintain that. Auditor's radar screen. This is the screen, like in Top Gun, you want to stay off of the auditor's radar screen, right? I know I do. I've been on that sucker a time or two, and it's not a good place to be in the sights of a tax auditor, but it'll happen from time to time. But how do we stay off of it? Good news is less than 1% of all returns are audited, and that's good news for all of us except for those people that are cheating big time. But there's no way you will ever be totally exempt from the IRS's prying eyes or the state's auditors. So take proper precautions and play it straight, do the best that you can. But there are a few things that put you really in their radar screen. It's what I like to call the red flags. That is, all the rest of us are down here doing business, but there's 1 or 2 of us that's got our hands stuck up waving a red flag. Come and audit me. I want y'all to come and visit me. Put me through the ringer. Here's how you don't do that. First of all, don't mess with shady tax preparers. Those are the people that have these little stick-up signs in their yard that say, come on, let me do your taxes. I'll make sure you get a $3,000 refund. You know, they're all over the place, especially right at tax season. Let us do your taxes. We'll guarantee you a big refund. No charge. We'll get a refund. We'll do it fast and easy. Make it easy for you. Shady tax preparers, there's a whole industry, a network of people that do this. Move around from place to place, fill out tax returns fraudulently, put information in there that tells the government they need to send you a check for X amount of money, but they've got a way of getting their piece of the action before you ever see the money. It's all in the fine print, the devil's in the details. So before you work with a brand new tax preparer that you've never worked for before that's making statements to you, a lot of people say, I will help you use this online stuff. They've got their systems figured out too. You want to talk to some people they work for, especially if you're brand new and green and vulnerable. You don't want to take the chance that this person is going to put you in trouble right as you're getting started in business, because you know what? That trouble will follow you for years and years and years. You may get by with it for 2 years, but when they do an audit 3 or 4 or 5 years from now, that may show up and you're into hot soup again. Deal with people you can trust. Unreported income. We all got a little nature about we just don't want to report everything we make. It's just kind of the American way, right? Well, you can't think that way as a brand new small business person. I'm going to encourage you as you're first getting started in business that probably your expenses are going to outweigh your income big time because you're going to keep up with all these deductions that we talked about. I want to make sure that you do that so that you can keep up with your income. Itemize it. That way you can put together a realistic business plan during the first couple of years. So write down your income that you bring in related to your business. Now, if it's not definitely related to it, don't mess with it because I want hard facts here. The same way with your expenses. But come up with a realistic report of how much money you're making with your business. And whether it's a business income or a hobby income, make notes on it. And at the end of the year, when it's time to fill out your taxes, list it down with your W-2s or your 1099s or however how it is. Now, as your business grows, you're going to learn how to take more deductions. You're going to learn how to avoid more taxes and do that. But your first couple of years, don't be afraid of reporting all your income. List it down. You're going to be surprised how helpful it is for you to know instead of guessing. You know who we usually fool the most when we try to be shady with reporting income? You know who usually gets the wrong end of the stick? It's us, because we're operating with bad information. We're operating with half truths or no truths or big lies. So keep up with the numbers. Why? Because remember the old NDCP, no demand, change the plan? If you've got the real numbers there, we'll see what your profit centers are doing, and maybe you can bring in some other profit centers or change your profitability to make these numbers end up in black ink. It's really good to make some money and have to pay a little bit of taxes. It's a really good feeling to feel like you have accomplished that and that you were honest. Something that gets people in trouble is always being late. Now, there's not a thing wrong with getting an extension on your taxes. It's legal. It's just fine. You need to know that if you owe $10 on April 15th, but you delay filing your return to October 15th, then you're going to owe that $10 plus interest. So it could cost you by getting extensions all the time. But it's okay to get extensions as long as you don't do it year after year after year after year. Because at some point in time, that old flag's going to go up. What's going on with this guy? Why can't he ever get it on time? Now, some of you in larger businesses, I'll put myself in that category, my tax accountants never finish our taxes until April 15th. Not one day early. They always push it to the last day. Therefore, I can't file a lot of my taxes, like my county taxes, until later. So I automatically am getting extensions almost every year. But I've got a good reason for it, and usually my accountant is signing off on it, so that's not going to get me in trouble. So that's the overview of taxes, depreciation, record keeping. But now I want us to bring our focus back to what we've been talking about the last 8 weeks. And focus on what we need to get back to these basics. An important rule is whatever you're doing, offer more to your customers and take it or leave it. Keep that in the back of your mind when you're making your presentation. Am I giving my customer the opportunity to say, let's talk about this and find common ground, or am I saying take it or leave it? I don't want you to be saying take it or leave it, because 85% of your customers will go look somewhere else. Create those raving fan customers. Figure out a way to follow up with your customers after every sale in some way to start building a relationship. That is so important. Feed your database every day. Add those new email addresses and contact information every day into your database, so when it's time to send out your promotions, you'll be sending it out to more and more people. Remember that your most important marketing tool in today's world is the mobile page on your website. The item that customers see when they're looking at their telephone shopping for people to do business with. Your mobile page is incredibly important. Make sure it's a good one. Add Google My Business. Add a Google My Business account to your business. It's a free website for you. Costs no money. that can drive so many customers to you, it's incredible. How do I know this? Because it's working for me, like all these other things. Create landing pages that sell stuff at your website. Don't be satisfied with a website that's because it's pretty. You find satisfaction and gratification to your webmaster when your website is making money. And websites make money on the landing and selling pages. Highlight your testimonial web pages. Get testimonials, because the testimonials is the single most important tool to help brand new customers shopping on the internet with lots of anxieties get past those anxieties. The testimonials are really important. Add video after video after video after video. They will make you more money than any other inexpensive thing you can do. It is incredible what videos can do for you on web pages. Remember the magic marketing moment? That's after you close the sale, and then you're able to go back to that customer and remind them you wanted to be 100% satisfied. And then you get to ask them, what are they thinking about buying next month or next year? Do they know someone that's in the market for something? And you're being the best person you can be. You're being very honest in that you're asking someone to help you stay in business. The magic marketing moment is where you find out what's next and lets you sleep so much better at night and knowing you're going to make it through some tough times. Let's take just a minute to breathe. Some people might start in Sales 101. That's how to shake hands and make a greeting. How to smile. How to give a warm greeting. That's basic, right? And then there's folks in 202, sophomores. They learn a little bit more about body language and doing this and that, how to call on customers, how to set up your guides, your planning calendars. 303, we'll take it up the next step about techniques, different presentations, different ways of marketing and merchandising, all leading up to how to close a sale. But right now, because y'all have been with me so long, that'll help us jump to Sales 404. Sales 404. We've done a lot of talking during the last 8 or 9 weeks. Lots of chat, lots of this and that. But this little section is going to get right down to the nitty-gritty of what I most want you to remember that I think has helped me through the years. Sell a lot of stuff, maybe to the tune of $260 to $290 million worth of equipment. Most of them small sales, because I don't sell anything really big. But it adds up to a lot over a lot of period of years. So I made a lot of mistakes, and I know some things that do and don't work. What works? Keep the mindset of ABC. In other words, there's a time that your whole mind is all about always be closing the sale. And when that mood kicks in, you become a salesperson. Got to remember that people buy from people they trust. So trust is an important factor, maybe the most important factor that has to be established before you don't move to the next step. You know what I mean? You'll have chit-chat with folks. You'll talk about this and that, but you never get to the level to say, I think I trust this person and I want to do business with them. Maybe I'll get all the information I need from them, but I don't intend to open up to them. I don't intend to close the deal with them. I don't keep shopping till I find somebody that I do trust. So you got to get there. So I've noticed that there's 5 things that salesmen that have called on me through the years, or I'm observing every day today. There's 5 assumptions that people are making that I know are costing them business. I know it is. One thing is when I'm talking with someone and their cell phone rings, they say to me something that might sound like, hey, you mind if I take this? This is an important call. Well, what they've done, if they were trying to sell me something, they just spit in my face, because they said to me, I don't care about you. This may be more important than me closing a sale with you. You can chalk it up any way you want to, my friend, but when it gets right down to where the rubber meets the asphalt, if you're talking with a customer about doing a business deal, or you're trying to create a relationship and you let that darn cell phone break it in two, that's not very smart. Have enough courage to turn the phone off when you start a conversation with a customer. so that you can have their attention. Now, I don't tell you, in today's world, you may do that, and they may 2 minutes into the conversation say, oh, I didn't take this call, Steve. That's okay. If they're the customer, they're going to be right. But it doesn't mean it's right for you to do it. Always let the customer know that that relationship you're building is most important. My cologne smells just great to me. Hey, man, I'm an Aqua Velva guy. It was good for my granddaddy. Aqua Velva was good for my daddy, and I love Aqua Velva too. And I just know that everybody I move up close to loves Aqua Velva. Well, that's crap. It's not that way. Some people, it makes them sick, I guess, if I put on too much. I know there's some of this sweet-smelling stuff that some of you guys wear turn my stomach inside out. And smoke, I used to smoke 3 packs of cigarettes a day, but today it makes me sick. And tobacco spit, I've chewed my share, but I don't want somebody walking around with a tobacco spit cup in their hand. And I love my Otis. He's my dog. I feel good for him by my side, but I know there's other people who have no use for dogs. I don't need to bring my opinions and justifications into my world of selling. I do not need to do that. I do not want to take one chance that I can avoid that I'm going to lose this deal or weaken my relationship because of my stupidity, thinking that just because I like it, somebody else does. Now, if I'm stepping on your toe here, so be it. In the long term, I'm helping put money in your back pocket. Think about these things. Use less cologne. Don't go smoking around anybody. Even if they say it's okay, don't do it, because the person that walks in the room, their wife, that's going to have something to do with making the deal, may be allergic to your smoke. Leave your pets at home. I used to have customers that bought their big old dogs, and sometimes 2 of them at a time, into my private office at my equipment company. And I just had to sit there and suck it up, because I wasn't going to tell them to get out of my office with their dogs, but I sure learned that I should never carry my dog into somebody's office. And then in time, as soon as I saw them headed in the office, I got up out of my desk. I said, let's go outside with your dogs and talk business. And you know what? They started getting the message. And we still did business, but we did it outside, and their dogs could crap on the grass instead of on my carpet. You know, use your mind. And some people just never plug their brain in. But now, you're going to be a member of the Associate of Entrepreneurs and Friends. And I want you to act like you got some sense. Okay? Dress to impress. Put yourself in the best position with your customers, because it's the little things that get the relationship started. How many times do you get to make a first impression? Just one. So think about this. I know it's elementary to some of you, but you know what? We all can relearn our lessons, can't we? And in this world, holy moly, I had a fella I was talking to on the phone the other day. He was buying something from me, so I didn't challenge him. But every other sentence, he was throwing off on one of the presidential past or presents. He could not carry out 2 sentences without slamming one of the politicians. Just incredible. He had no idea what my feelings were. And I was saying to myself, I just sit there and bit my tongue because he was throwing off on my guy, but I sure didn't let him know that. But I tell you, I was saying to myself, the world is full of people that are doing this. Now, if he was on the selling side talking to me, I would have probably hung up on him. He'd have never got to square one. So whatever your political views are, leave them outside of your sales presentation. Matter of fact, I'd suggest that in today's world, as split as the country is, you leave them out of your business conversation altogether. Because 50% of the people that you talk to will agree with you, but 50% are going to buy from someone else who are not slinging mud that they don't like. Keep that in mind, okay? So important in today's world. Is it okay for you to go into an open-door office and take a seat with the person you wanted to talk to if they're sitting there on the phone with someone? If they're having a conversation on their phone, do you go into that office and sit down with them? Well, you know, they might even see you coming and wave you in. But old Papa Steve-O here is going to tell you, do not go in that office. When they wave you in, you just say, I'll wait a minute, I'll wait out here. it is not a good thing for you to hear somebody else's one side of the conversation. And sometimes if people talk loud, you'll hear the other side too. Don't put yourself in that position so that you're not eavesdropping, but indeed you are. It's better to give them that privacy. And even though they might have waved you in or said it'd be all right, let me tell you that when they do that, when you don't go in there and you respect that privacy, you have indeed set yourself to a higher plane. Because when you do have a chance to talk to them, I'll guarantee you'll get more of their attention and they will appreciate the respect that you've shown for their privacy. Now, after you've been in business a while, you're going to do some business with your friends and family or folks that you just know, that when you give them this proposal, that you're going to get that order because it's you, because you love them, they love you, you have these orders time and time and time again. In other words, I don't have to worry about it, it's in the bag. Wrong. In today's world, nothing is in the bag. Another quotation is as close to your customer as 3 clicks on their computer screen. I can go on Google and get a quote on almost anything in 5 minutes. And after you leave your proposal on the desk or give it to them on the telephone, you must know that most folks are going to type in and compare what you said with what they can find somewhere else. So you always have a feeling that you want to follow up on a business deal. Following up is probably 80 to 90% of the success of getting orders with established customers. The key word there is established. With customers you don't have a relationship, it's a must, 100% follow-up must. But even with those people you've done business with a long time, you really need to stay in touch with them until you get the order or understand what's going on. Because there's a lot of people out there like Papo Steve-O here that will take orders away from you. There's a lot of hungry salesmen that know exactly how to do it. There's a lot of people that gear their targeted advertising. Remember all that targeted advertising we talked about? To the low-hanging fruit. That if you're one of my low-hanging fruit and your customer, that you just give them a quote, let me tell you, there's a good chance I'll take them away from you before you get the order. How do you protect yourself? Follow up, and then follow the rules we're going to talk about in a few minutes. Remember that urgency to respond is real. Maybe you're a laid-back person. Maybe you don't feel like you need to push anybody. Possibly assertive is not even in your vocabulary. Well, assertive needs to be in our vocabularies because people are moving fast and impulsive, and we have to stay hungry and aggressive. We have to be assertive. Remember that when someone calls you or sends you an email or a text message, they expect a response. And if we wait all day or 2 days before we answer emails and text messages, the good chance is they have become angry or disenchanted with you or have already done business with someone else. I try hard, but when I'm overwhelmed with work sometimes, I usually let my text messages are the last things I check. And last week, I probably had 50 text messages come in related to business, and on 2 of them, I was a day late getting to them, and when I sent them the text message to answer it, the response was, thanks for the reply, but I've already done business. Isn't that something? I might need to readjust my thinking because I put text messages last. I'm starting to think that people are texting or maybe more likely to be buying right now. Maybe I need to put them at the first of my list instead of returning phone calls and answering email. You know, we live and learn, and we'll talk about that in future lessons. Delivering the quotations and information, solving those problems as soon as you can, make a big difference with the way people think about you. And if you get late, I'll give you this little tip. Be honest. I got sick a few weeks ago for a couple of days, got behind. Those emails that I had to wait over 24 hours to answer, I started out by saying, I am so sorry. I try to answer emails within the first 24 hours. Please forgive me. Let's move on. But don't ever be ashamed to be a human. People would rather hear that than some BS story. We're right on time now, and here's the old gorilla. Through the months, we've talked about guerrilla marketing, as the gorilla is the one in the game that he plays by his own rules. He's got a great memory. He understands what body language is all about and moves forward. Pretty much gets what he wants, right? Well, in Sales 404, our goal is to be successful and to create good relationships, but we got to know that part of being successful in sales is being the gorilla in the room. That's being the old wise one, the one that knows a few things that other people don't know. And that's the purpose for this little presentation right here. Number one, never ever tell all that you know. Never give away valuable tidbits when you're making your presentations or talking to your customers or your competitors. Secrecy is important. The little things that we learn by staying in the game year after year after year are things that you own. Don't give them away. Never tell all that you know because it will be used against you. Never itemize things you don't have to itemize on your quotes. You can itemize all the unimportant things you want, but the important items that you'd rather not itemize and put a dollar value at or a source value, don't list them on your quotes. Don't do it. You talk about value-added items instead of itemizing your quotes. Why? Every time you itemize something, you're giving your customer something to pick on and ask for a discount or to challenge you on. So I want you to have quotations that are works of art, but I want you to be careful what you itemize, and especially those items that you put prices on. Let's say that you're a building contractor and you're going 50 miles away to do an important job, and it's a big job, and on your quote, you list down that part of your quote is travel time. And you're going to travel 100 miles for 35 days, the duration of the project, and therefore you're going to travel 17,000 miles, and that cost is going to be $15,000 in travel costs. Well, that's a justified expense, right? But you don't want to tell your customer that. Why? Because they don't see that and study it and say, wow, maybe if I get a contractor right here in town, I'll save that $17,000 and have money left in my pocket. You see what I'm saying? A lot of items you don't want to put down on your quote. You be smart about this. Never itemize items you don't have to. When you're making a proposal or a pitch, when you're selling something, your project, your service, have in the back of your mind that I'm just not talking sales here. I'm making a promotion. I don't have a promise statement in it and a vision statement. In other words, this is going to be something I've thought about in trying to close a deal. You want to do what it takes to create a complete satisfaction and comfort level with your customer. So you just don't say, throw the proposal out here that's written by a computer or somebody else. Say, well, here's the deal. You want to sign here or there? No, you be a professional salesman. You have read everything on it. You understand it. You know how to answer the questions. Maybe you've got a list of frequently answered questions or frequently asked questions that you already know the answers to. Understand that when you have a chance to sell something, take advantage of it by making it a proposal. Don't give away the names of your vendors, subcontractors, or manufacturers. Because lots of times customers in today's world and through the access of the internet, if you mention that a certain subcontractor is doing this for you, a certain vendor is doing that, before 5 minutes after you leave the office, they are contacting and calling those people and seeing if they can deal direct with them. You got to be real careful with that in today's world. Protect your sources. So let's get down to the nitty-gritty. You've done your homework, and now you're in the closing. Now we're in the meeting. We've done the negotiating. You made your point, and now the customer is feeling like, okay, I think we've got a relationship here. I'm feeling better about doing business with you. But still, some people just cannot say yes. I'll tell you that 80 to 90% of the people who are not doing business on a regular basis, always buying and selling, the people that are doing it every now and then, some folks just can't say yes. They've saved their money. They're ready to buy. They want this thing. But when it's time to give it up, they're saying to themselves, hey, man, I'm enjoying having a little security money in the bank. Or shucks, I really don't want to have another car payment. Or by golly, do I really need this, or would I be better off with something less? And they will just twist their arms and do it. I've got some grandchildren that will go to Walmart. I got one that'll go in the store, pick out what she wants, and we're out of there in 2 minutes. But I got some others that have to look at everything and just can't decide what they want to do. Well, serving the public in the retail world, same way. Whether or not you're selling services or products, some people have a hard time saying yes. Some people, it's so hard for them to say yes, they actually go into fits and cry and have a heck of a hard time saying yes. I mean, it's awful. Move up to something and just say, nope, just not going to do it, and run away. And then you have those occasions maybe where the husband's ready to buy, but the wife isn't, or the son wants to buy something, but his parents don't. So we're always getting into a situation in the sales world where you have to deal with people that will not say yes no matter what. They'll walk away from the deal, and therefore some of these folks never buy anything or always buy something really cheap or something they really didn't want. So how are we going to deal with that as professional sales folks? Well, here's the little secret I want to tell you tonight, and it's an important one. First of all, your presentation needs to be a work of art. The paperwork that you're putting in front of that customer needs to be complete, full, typed, looks nice, has some images on it. All that's left to do is for them to sign their name or maybe write in the bottom line figure. Everything else is ready to go. And it looks good, and you're able to explain it to them easily. That explanation is so important. When you going into that presentation, doing those negotiations, when it's time to close the sale, you don't want to be spending time scratching out on paper, doing this, or explaining out what that word should have been or wasn't. Things need to be easy to read and easy to explain so you can move through it very easily and people comprehend it. Now, you ever heard of this fellow? Dr. F.A. Mesmer, Austrian physician, 1815, passed away. Well, Dr. Mesmer did something a long time ago that affects salespeople today. It affects me every day of my sales life, and I hope it does you, because Dr. Mesmer is where the word mesmerize came from. And mesmerizing is an important part of a professional salesman's tool belt. What does mesmerize mean? To be able to hold someone's attention so that they write out everything else that's going on. I think of my grandchildren watching SpongeBob SquarePants. They sit in front of that TV, and whatever else was going on in the room, it didn't count because SpongeBob had their attention. What we have to learn to do is to be SpongeBob. Because I want you to spellbound and entrance and dazzle, bewitch, charm, captivate, grip, and even almost hypnotize the people that you're selling to. And you know what? You can do it. And with practice and practice and more practice, you'll get a lot better at it. Mesmerize is an important word. You know, when you go to church, you got a really good minister up there doing his very best to deliver a sermon. He's got the choir singing the right tunes and the right pitch, the right words. He knows how to raise his voice and lower his voice at just the right time. He knows how to bring it in, to bring that message in right at the end, so that when he's ready to close the deal, we're all mesmerized. Listen to every word that comes out of his mouth. A professional salesman does that as well. Learns to get the attention. Learns to use their voice in such a way that what we're looking for always, just like the minister, we're looking for that aha moment. You heard that term before, aha moment? It's used in a lot of different ways. But I'm using it here like, remember when you had your children or your grandchildren, sometimes at night they'd have the colic and cry all night or up to 2 or 3 o'clock in the morning, and we'd rock them on our hips and we would hold them and we would walk. Sometimes we'd even get out in the car and go for a ride because that's what it took to get the baby to stop crying. I call that trying to what you can to get that baby to quit hollering so loud. And you know, at some point in time, as you're holding them there, they look up at you with those beautiful eyes and that three-pointed smile, look up at you and they go, Take that deep breath and settle down, and that is the aha moment, because you know they have finally relaxed and quit all the anxiety stuff. They have finally relaxed and are ready to go to rest. Your customers do that at some point in time. When you're able to bring them to the aha moment, they know that they like you. They know that they're trusting you. They know that they want to buy from you and not anybody else, because you have earned that, and you're looking them in the eye, and you're shaking your head like this, and you're shaking your hand in your presentations like I'm doing here, and you have lowered your voice somewhat. You're capturing the moment, as we talked about last week. You're making sure that they understand that what they're getting has a great price value, and they are very comfortable with you and your product and their reputation, to the point that they can have an aha moment and let go of all those anxieties and reasons why they don't want to buy from you. And when you do that and you say, let's do this thing, and here's the deal, and they're breathing easy, and then you just move right in and you just point right here, let's initial this, you initial that number, and you just ask them to initial it, or you're already doing your head and your arms like this, and you just reach in and say, let's shake on it, and they will naturally reach out and grab your hand, and you shake on it. And you know what's just happened? During that aha moment, and you as a pro realize that, they've just bought, you just made the sale, and they never said, I'll take it. They never said, I'll buy it, I want it. Because the professional salesperson does not wait for someone that says, I want to buy this. No, you move through mesmerizing and the aha moment to a point that you help people say they want to buy this thing without ever having to say it. Then you move on, close your deal, and things are good. Practice on this, and we'll have some seminars and webinars that focus on this a lot deeper in negotiating, the different skills, the body languages you can use. So very important. Now I want to say to you, congratulations for completing this series. So many of you have been with us for many, many lessons, and it's been my pleasure to work with you. I'm looking forward to seeing as many of you as I can in the future, not only online, but in person when we can. Something that's really important to remember as we're closing out this semester, let's remember, it's not how many times we get knocked down that counts, because as new business people, we're going to get knocked down a lot. What really counts is how many times we get back up. And when we're getting back up, being determined to win the race. Winning the race doesn't always mean coming in first or being the billionaire or having the most sales. In my opinion, as someone that's been doing this for 63 years, as you can imagine, my opinion of how to win this race is to stay in it, enjoy it, and finish the journey. Set your goals high, set your standards high, learn every time we close a deal, every time we make a mistake, learn how to finish this journey and stay in it, because every year that you stay in it, you learn more techniques, create more relationships, and it becomes a little easier, actually. I'm proud to have you as my friends. Here's a statement of values that I put together this week. I wanted us to try to bring this into our lessons next semester. I'd like for each one of us to have a statement of values. I was reading on this weekend, and I came up with these. Looked at a lot of different ones. What are the values that I want to build my business on and my relationships for the next few years, forever? Because these may change. I want to learn to respect every person and make sure that people I do business with know that I'm doing that. I'm going to try real hard to maintain high standards. I want to earn trust. I want to foster partnerships. And I want to embrace excellence. And as we look at these, this might be a good statement of values for the Academy of Entrepreneurs and Associates. I'd like to get your feedback on that, what you think of it, and encourage each of you to come up with your statement of values. Again, your mission and your vision statements and your promise statements are going to be really important as well. Congratulations, everybody. Keep being the best person you can be. Help others. Let your light shine. Keep Jesus Christ in your life. And next, right beside you as you're riding in this journey, you'll never be alone if he's sitting beside you. You always have a friend on your side. So next fall, let's start doing it again. I'd like all of you to rejoin us for more series in the future. I'll keep you on your mailing list until you tell me to take you off. And we'll just think about doing this and move on. I'm going to turn the recording off, and we'll chat for a few minutes if you'd like.